Gohil, who is a chief investment strategist at Kotak Alternate Asset Managers. Jitendra, hi, good afternoon. First of all, I want to get your sense on the markets. We have comfortably crossed 25,000 mark now, which was a debate, at least if I would have spoken to you 2 weeks back. But after these kind of levels, do you think one should still continue to invest in market or should wait and watch at least for the GST event?
Hi, and thank you for inviting me on your show. See, we think that look, last 1 year, if I see market has been pretty much flat. We have seen significant volatility. News flows have been, pretty volatile. And if I see FPIs were the major, sellers in the market, while domestic investors have been just buying equities, and hence you see this market remain largely flattish. But going ahead, what we feel is that there are several triggers that are very exciting for the market. First, starting with festive season, I think we are going to see decent festive season this year. Also, monsoon has been pretty okay, and the news report suggests that the rural demand has started to pick up. Demand in tier 2, tier 3 cities already has started to pick up. And government has also started announcing few reforms starting from GST, right? So I think if I see from macro perspective, this is a pretty good setup for the market in the second half of the year. Second, if I look at even on the monetary side, monetary front, we have seen RBI has started to cut rate now, and hopefully we'll see more rate cuts coming from RBI as the inflation is undershooting expectations. And hopefully even US Federal Reserve will also cut rate in the upcoming policy in September. So all in all, we think that from a fiscal side, government has started taking some efforts. New orders have started to flow in. Monetary policy has been supportive. And if I see what are the risks, I think barring this US and India ties, which have become little sour in the past, I think barring this major hurdle, market seems to be bottoming out. Market seems to be forming a nice bottom after a years of consolidation. And from second half onwards, we think that market is going to, perform or outperform other emerging markets also. That is possibility.
All right, Jitendra, I also want to know things on your radar as far as the Jackson Hole Symposium is concerned. What all are you looking at? What kind of commentary are you looking at from there?
Yeah, so from global perspective, it is where you thought that US inflation will be somewhere 2.5, 3%. It is touching almost 3%, and you are seeing a 90% probability of a rate cut, right? So today, rate cut probably is a political subject in US. If you just look through the numbers, inflation is actually overshooting expectations, but still, Federal Reserve is expected to cut rates. So I feel US economy, particularly the job market data that we saw in the last couple of months, have been actually weaker than expected. So the growth in US is slowing down. We have seen the tariff-led uncertainties will start to hurt US economy in the second half. However, the inflation is going to overshoot. So it's a classic case of kind of a stagflationary scenario in US where inflation is overshooting and growth is slowly slowing down. And it's a very tricky kind of a move, but I think market is pricing in one more rate cut given all this political pressure. And remember, US yields have gone up dramatically, right? The real interest rate in US is still very high, and I think this is where we feel that there is a chance that the federal rate might announce a rate cut. But net, I think this is a classic case where inflation is going to remain higher in US, while there will be a lot of political pressure to see kind of interest rate cuts.
All right, Jitendra, I also want to understand with you sector specific wise. Now, FMCG has seen a lot of traction ever since GST news has come in. Do you think with the festive season, as you were mentioning, is yet to come into effect, there will be more opportunities in this sectors particularly?
So FMCG, particularly if you say they are seeing cost pressures are easing, right? Right from tea prices, for example, has started to come off. There are other commodities also has started to come off. So from margin perspective, they are going to benefit. Plus, you are seeing GST cuts, but FMCGs will not benefit to the extent that consumer durables companies like AC manufacturers or washing machines and auto companies are going to benefit. So if you are asking me just from FMCG perspective, there are two ways to look at it. One is the rural segment has started to pick up pace, where the demand momentum has started to pick up. However, from a investment perspective, I think these stocks are still very, very overvalued, and market is taking note of that. That the margins of these companies are at somewhere historical high levels when the net saving rate of individuals are at 40-year low. So these companies are sitting on a very, very hefty margins, and I feel that they have not passed on the cost easing pressures, right? So I feel that going ahead, there will be some kind of margin disappointment in the medium to long term. However, from a very, very near term, from festive season perspective, cost pressures are coming down. GST, cuts have been announced so far, and also, the demand momentum is also picking up due to festive season. So in the near term, probably you'll see some pickup, but we are a little bearish on these FMCG names from a medium to long term perspective. However, if I look at the entire consumption pack, there we are little bullish on hotel segment, travel tourism. We think that there is more money to be made here. Even durable segment is looking pretty okay. Auto segment, a couple of companies we like, especially on the premium vehicles, four wheelers, and that side. Even premium two wheelers are doing decent. So I feel that it's a mixed bag, but we prefer more consumer discretionary companies, a little bit on the premium side compared to FMCG pure play FMCG companies.
All right, that's going to be your sector call. Thank you so much for taking time out today for this chat. Thank you. We move
Thank you.
on. Prime Minister Modi had